Right, well today we're here this morning to talk about the forthcoming event, the EU Referendum.
Which is now just 1 month away.
Just 1 month away, and just to remind people, this is really a very large event. In my career so far, which has been a few years, I can't think of a bigger sterling related event than this. So we know when it's going to happen, but we really don't know the outcome, and it's still very much up in the air.
So an event like this, obviously we're referring to the EU Referendum. Do you think there's anything in the past that we can possibly compare it to that would give some sort of...
I suppose sterling falling out of the ERM in 1992, that's when sterling fell by some 25%. We didn't really so much know it was going to happen, but when it did happen, that was a very aggressive event. So, and then arguably last year, Switzerland with the central bank, Euro Swiss having a huge move, 35% in a matter of minutes. That's the kind of equivalent impact that we could be having here with the result.
Yeah, so we're talking about a pretty significant impact on the FX markets, but predominantly obviously on sterling. It's sterling risk that we're talking about. So just thinking about sort of sterling and any related events, I mean the Scottish referendum.
I mean,
comparable at all, or?
It was nervous for a while, wasn't it? You know, we had that weekend press, and then we came in on the Monday.
Well, the polls were very close for a long time.
Very close.
Yeah. And uncertainty was...
And that's it. You know, it's the uncertain element that gets the market very nervous, and that's what gives rise to a lot of volatility. So this one's bigger, I would say, because it's bigger than the Scottish referendum, because the economic impact is arguably global. What goes on here in the UK.
Well, we've heard Obama talking about it. The IMF.
Yes, absolutely.
It seems that everyone's really
everyone's got a view.
Yeah, that is for sure. So I mean, linking it back then to businesses in the UK, which is obviously what we're sort of concerned with.
Yes.
What do you think of potential impact for businesses with overseas operations and?
Well, the outcome is uncertain, so anyone that has an FX risk should really consider hedging. I think it's expected that if we were to exit the EU, that would have a negative impact on sterling. If we remain, there may be a sort of a relief rally to sterling. So arguably anyone with euro revenues or euro costs, dollar revenues or dollar costs, they all should be getting together and looking to hedge a good chunk of exposure, as long as they've got high confidence levels of forecasting it, or it's a committed exposure.
Sure. And I know that this is a sort of topic of conversation that's come up before. You know, if I've got a particular view on what I think the outcome's going to be, I mean, some of the polls recently have started to show in favour of a Remain being the most likely outcome. So, if I'm sort of swaying that way myself, and I think that's the most likely outcome, I mean, if sterling rallies on the back of that, is it a good idea to probably hold off on that?
Or I think there's a risk. I think I wouldn't be led too much by the polls, because, look at our election.
Of course, yeah.
I mean, no one expected an outright win for the Conservatives, and elections happen every 5 years. This happens, the last time it was in the 1970s. So how can we gauge how the whole population is going to think about this? So,
Absolutely.
The polls are suggesting, or the betting, there's a 75 to 80% chance that we remain. I just think don't take that chance. Let's, what would you do, if you had a business and let's say you had clear forecasting over the next 6 months? Would you look to hedge?
I mean, you'd have to think that this kind of event is far too risky to gamble on. And therefore you need to have proper plans in place, a strategy in place to sort of mitigate those risks, which obviously we're talking about the FX risks here, so obviously your sterling exposures basically.
Absolutely. And also arguably, because we're going to go into this event, the whole market is going to start to freeze a little bit, isn't it? The liquidity is going to be drained from the market. Now,
we've heard about. I mean, Mark Carney's mentioned about that, and obviously, if you think of it, and I know that you've sort of got a way of describing it in terms of sort of getting it in a clear and concise way about the impact as we go up to the vote itself. Probably in the week leading up to
Yeah, it's going to be quite choppy out there, and if you think about a lake full of liquidity, that's the same as the FX market. We're talking $5 trillion every day, and then suddenly in the lead up to such a big decision like this, all those prices, all the volume that people put into the market, they're going to all pull it out of the market and wait to see what happens. And because of that, the market movement is going to be very frenetic, and trying to deal. Imagine the result comes out, and be it we remain or we exit. What do you think is going to be the market implications?
Well, I mean, certainly, I think again, you mentioned it earlier in terms of the movement in the Swiss franc.
Yes.
And admittedly, that was obviously an unknown event. We didn't know that they were going to do that, but still, I think you can draw some comparisons in the difficulties that created within the market, because the market just dipped significantly because lots of banks sort of refrained from actually putting in prices, as you say. So this can cause some vast fluctuations, which creates a bit of a headache if you've got transactions to do at that point. So certainly, I think getting a lot of planning in place and having the strategy right is the way to go.
Yeah, don't hold, don't gamble, and at least don't expect to get the same rate that sterling euro or sterling dollar was the day before. Don't expect to get the same rate the next day. It could be a lot higher or it could be a lot lower. So if you know your risk, hedge, don't gamble.
Absolutely.